U.S. stocks fall as record rally loses steam amid earnings. In a surprising turn of events, U.S. stocks took a tumble on Tuesday, marking a pause in the record-breaking rally that has been driving indexes to new heights. The reason behind this sudden shift? Investors are taking a closer look at corporate earnings. As of 9:52 a.m. in New York, the S&P 500 index, https://www.bloomberg.com/quote/SPX:/IND, had dipped by 0.2%. The tech-heavy Nasdaq 100 index, https://www.bloomberg.com/quote/NDX:/IND, also saw a decline, dropping by 0.6%. But here's where it gets interesting. This shift in the market has sparked a debate among investors and analysts. Some see this as a natural correction after a period of sustained growth, while others view it as a sign of potential instability. What's your take on this? Do you think this is a temporary setback, or a sign of a larger trend? Wall Street mixed as trade talks balance against tariffs' impact. Wall Street's mixed signals a delicate balance between trade talks and tariff turmoil. As the world watches the ongoing U.S. trade talks, Wall Street is struggling to find its footing. On one hand, investors are cautiously optimistic about the progress being made in the trade negotiations. On the other hand, the impact of President Donald Trump's tariff policies is starting to take a toll on corporate earnings. This delicate balance has left the markets mixed, with some indexes rising while others fall. The numbers, a mixed bag. At 9:38 a.m. Eastern Time, the Dow Jones Industrial Average rose 68.00 points, or 0.16%, to 44,393.01. The S&P 500 gained 5.04 points, or 0.08%, to 6,310.64, while the Nasdaq Composite lost 19.88 points, or 0.09%, to 20,954.29. These numbers reflect the uncertainty that investors are feeling as they weigh the pros and cons of the trade talks and the impact of tariffs on corporate earnings. The tariff toll, GM and RTX take a hit. General Motors, GM.N, saw its second quarter profits skid 32% to $3 billion, with the automaker blaming hefty tariff costs for carving out $1.1 billion from its results. The company's shares lost 6.5%, while peer Ford, F.N, also dipped 1.4%. RTX.N, slashed its 2025 profit outlook after taking a direct hit from Trump's tariff war, sending its shares down 3.9%. These numbers are a stark reminder of the impact that tariffs can have on corporate earnings. The trade talks, a ray of hope. Despite the trade turbulence from Washington, the robust U.S. economy has. Stock market overview, Dow jitters, Nasdaq retreats, and medical stocks surge. Headline-grabbing market swings seem to be everywhere today, with the Dow facing stubborn resistance and the Nasdaq retreating from its record-breaking highs, while one standout in the medical services sector soars on impressive earnings results. What's really happening behind these numbers, and why do the market's moves matter for everyday investors like you? Let's dive in, but here's where it gets controversial. Not all market news is created equal, and reading between the lines can make all the difference in your investing journey. Before we get into the latest updates, a quick but crucial note: all information provided here from Investors Business Daily is strictly for your education and general awareness. It's not a recommendation to buy, sell, or hold any particular stocks, or to pursue any specific investment strategy. Why does this matter? Because some might claim that this kind of coverage is actionable advice, but that's not the case. Remember, investing involves risk, and the past performance of any asset doesn't guarantee what will happen next. The live market data you see is sourced from Nasdaq last sale, but it's important to be aware, these prices may not reflect every market or trading venue out there. Ownership data comes from LSEG, while estimated figures are based on inputs from FactSet. Although the information comes from sources widely considered reliable, neither timeliness nor accuracy can be absolutely guaranteed. And here's the part most people miss. Even closed captioning information may be subject to these same limitations. You might also be surprised to learn that individuals who contribute information and analysis might personally own shares in the companies they discuss. Does that influence their commentary? That's a question to ponder, and one that regularly sparks debate within the investment community. Investors Business Daily, including all of its digital and print platforms such as IBD Digital, IBD Live, and others, retains all rights to its trademarks and materials. For the legal nitty-gritty, everything remains subject to their terms of use, which you can examine in detail at their official website. Now, it's your turn. Do you believe market summaries delivered live truly help investors make smarter choices? Or do they risk encouraging knee-jerk reactions based on incomplete data? Have you ever found conflicting investment opinions in the news, and if so, how did you decide who to trust? Let us know your take in the comments, especially if you have a strong stance or see things differently.